Welcome back, guys, to another video lesson. In this video lesson, we're going to talk about the tools that you're going to need to trade this strategy. So let's dive right into it. Okay, and I'm going to show you on the charts how they look and what you need and all that. Okay, so you're definitely going to need a charting platform, whether it be MT4, MT5. You can use Thinkorswim. We're trading indices, so it's important that whatever broker you have obviously has indices or CFDs. I like TradingView. That's what I use. That's my standard. And then I also use Thinkorswim for their tick data. But luckily, Stefan has coded a tick data indicator that you can add onto your charts. Everything will be posted in the private channel where the videos are. So you'll be able to access all those indicators once Stefan puts them up there. Okay. These are the indicators. You're going to need the timing indicator, multiple time frame indicator, tick data, correlations, weekdays, previous day high and previous day low indicator. Okay. Software is going to be Bookmap and Flow Algo. And you're definitely going to need some type of trade management tool. So TraderSync, I like TraderSync, or you can use the custom built one that I made through Airtable, which is available on my YouTube channel. So I'll post a link to that so you can be able to use Airtable to track your trades, which is very, very important. Okay. You need to understand which patterns and strategies work best for your trade plan. Okay. And then on the next lesson, we're going to go over setting up your charts. Okay. So let's go into a new window real quick. Okay, this is Bookmap. This is going to let you see a lot of data that you're not able to see with TradingView. Okay, so I'm not going to teach this right now. This is going to be way later. It's not something that you absolutely need to have unless you really, really want to see different levels in your charts to confirm your trade bias. Okay. It's a really, really great tool. So once I teach you this, you're probably going to have this just running all the time. But it'll tell you where the volume's at. Okay. So for example, if we have some sort of pattern in here, we can see where the pending orders are in the market. In the blue shaded boxes, those are orders as well, but you can see on this column here, where the volume's at, where the orders are. Like these are live orders, right? So once an order gets filled, you'll see those orders get filled. You'll see where these pending orders are. Now, remember, these are advertisements. So somebody could be placing a large order right here on this red line and then remove it instantly. Okay, so this actually lets you see the liquidity in the market. And you get to see, obviously the order flow. You can see buyer seller absorption. So it's a really, really, really cool tool that we'll talk about way later in the course. But again, it's not absolutely needed. You can trade without it. I just like to trade with it. Okay. The next thing is the same scenario where you don't absolutely need it, but I like it and it helps me out. Okay. This is a real-time option order flow. Okay. So this basically tracks when actual executed trades are placed. Okay, so when we look at this, it's going to show you, this is based on options, but there are SPY and NASDAQ options. Okay, QQQ would be the equivalent to NASDAQ, right? So it'll tell you, hey, on this date, somebody placed, $153,000 order on puts, meaning they are looking to short the market, right? So puts mean shorts. And again, we're going to go over how to use all these features to your benefit. Okay. So right now I'm not going to be teaching that. It'll be way later in our lessons. Okay. And you'll be able to see like, okay, some institution put, 150 grand on shorts. They're betting 150 grand. And these are actually executed orders. And it's going to tell you at what price that they got in at, right? So they're going to tell you, okay, at this level, at this price level, for some reason, they decided to place a huge options order in the market. Okay. And we can tell because we know how much volume they're doing, over 150K here. This one right here, you can see on Apple on 2/16/2018, You can see they had $150 strike price, meaning they were hoping the price was going to trade above 150 bucks. They bought calls. You can see the expiration, how many contracts were bought, and you can see how much premium they paid. So they paid $775,000 to bet the market long in this scenario here. Okay. But we'll talk about a lot of this later, but this is going to show you kind of an overall bias of the market, right? So up here, it's going to tell you neutral. The market is in a neutral state right now. Okay. So depending on whatever contract, right? So if this was all just Apple, it'll tell you most people are, 50-50 on Apple. When this thing starts going higher, then we can see, oh, most people are bullish on Apple, right? So it's going to give you a lot of insight to what's actually happening based on the options market. Okay. Let's go into our tools. Okay. I like to use a 200 EMA, which we'll talk about in another lesson. I don't really use the SMA, so I'm actually going to remove that. It's 200 EMA. I use a previous day's high or low indicator, or you can use the 4D one, open and previous days, weeks, and months, high and low. Okay, so that'll be displayed here. Let me turn this off real quick. Okay, you're gonna need the FXCN week and day separator. I like to use this because, and when we're going on to like a 15-minute chart, it's easier for me to depict. Let me remove this. Okay, it looks messy right now, but I promise you it'll all make sense eventually. Okay, so I like the FXCN week and day separator because it tells me, okay, this is Thursday, Wednesday, without me having to manually look back and understand which day it is, Tuesday, Monday. Okay, so I can look at that. Okay, so if you look, we have a Monday high of the week, trading in to Thursday's low, midweek reversal. Okay, so it just makes it easier to see. Okay, then we have our multiple time frame indicator. Okay, so this is basically going to show you each time frame, like for example, this red box right here is our daily or our weekly time frame. Okay, and then we have our daily time frame here separated in the gray box, and then the lower we go, this goes into the 4-hour time frame, so we can see how each candle is being built without having to switch time frames. Okay, so if I go down to a 5-minute, we can see how each one of these things starts breaking down of how each candle time period is being built. Okay, from the highest time frame down to the lower time frames. Okay, very simple to use. It's going to help you understand how each candle is being made and formed in reference to the previous candle. Okay, on the higher time frames. Okay, and then I like to use the wicked fractals, which is made by Mitt. I don't know if you guys know him, but basically it's just going to show you your swing points. So it's just easier to identify your swing points, obviously. And then obviously we have our 4D footprint. Okay, so basically this is going to tell you the times the market is moving. So when it's more likely to move, you'll see at these times how the market explodes, pulls back, right? So these timings are very important because it also anticipates future timing movements. Okay, so here we can see at this timing we have a move. At timings we have a move. Timings we have a move. At timings we have a move. Okay, at timings we have a move. So there's a lot to do with this, right? So you can see here at particular timings, give it or take 5 minutes on each side. We have a movement, timings, movement in opposite direction, timings, pullback. Okay, so there's a lot to do with the timings with this indicator, and it's really amazing. And it also, when you switch assets, so if you switch to US30, it'll have different timing footprints. If you switch to gold, it'll have different timing footprints based on historical data. Okay. And then we also have our, this is our dark candle phenomena, which is going to be used in the futures market. So we'll have to use the futures contract for NAS to be able to see this. but more on that way later in the course, okay? And then down here, we have 40 correlations. So this is showing you the correlations between gold, the Dixie, the VIX, and the NAS. Okay, so in this indicator, you'll be able to see market correlations, which we'll talk about later without having to have so many charts on your window. And then we obviously have our tick data, which is showing the NYSE tick data when the market's most likely overbought or oversold. So this is a way better tool than an RSI divergence. This is actually showing us data from the New York Stock Exchange when we're below or above 1,000 points. It's more likely to be safe to go long in this area, right? So as you can see on this chart right here, we drop into below 1,000 points and then we push. When we push up above 1,000 points, you can see how we have that decline back down. Okay, so this is tick data down here, and all these indicators are going to be available in the private section. Okay, and that's pretty much all you need as far as indicators. Okay, and remember, everything has a tool, so we're not always going to be using every single indicator. Okay, there are tools that we need to use at specific moments and times. All right, guys, that's it for today's video. Hope you guys enjoyed this lesson.